Hello my fellow freedom builders and welcome back to the channel. It is just about the end of May and therefore I will give you a quick update on my Etoro portfolio as I have promised. It has been a very volatile time and I can hear from a lot of you traders out there that you have found it hard to invest and trade probably here in 2021. 2020 was a fantastic year. Everything went up after the crash in the spring, of course. And therefore many of you are a bit frustrated. That is where an automated strategy can come in. Now, we have two different strategies. We have the one that we are running on Etoro right now, and then we have our purely ETF-based strategy that are coming out as an email newsletter once per month. As some of you might remember, I'll show it to you later, and I'll also put a link to it below if you want that free strategy sent to you every single month. But let's have a look at it. First of all, let's just go into Etoro here. And as you can see, the first quarter, we actually ran the ETF-based strategy. There was a lot of bond ETFs in there, and since there was some very sharply rising interest rates, the bonds were hit a bit, and the same was the oil that went in the wrong direction for us. So we had a bit of a rough February. After the first quarter, we actually shifted on this account to our more stock-based strategy. There are still some ETFs in there, and that is when we go risk off in the market. So this is the strategy we are running right now, and as you can see, just about break even for April and around 1.9% for May so far. Our average month with this strategy is just above 2% per month, 2.3 or something like that, I think it is. And then this one is nicely aligned, and let's see what will happen in June. When we're looking at some of the overall stats for this strategy, you might remember them. This is 2021 so far, and the reason why this is in the positive and the Toro strategy is in the negative is of course that this strategy, this more stock-based strategy, is a lot better in the first quarter. We can just have a look at it here. Now the second quarter is not completely updated. We're about 1.8%, I think so, 1.9% for second quarter. But as you can see, the first quarter, maybe it's a bit small here, but just around 14% for the first quarter. That would have been nice to have booked that on the Etoro as well and not just on our normal stock account. But we have switched to that there now. And as you can see, we have 83% of the quarters winning when we are testing back to 08, and we actually have some tests further back to around 2000, which are always also showing pretty much the same results. Our average quarter is 8.7%, that is compounded interest. And as you can see, when we have a losing quarter, the average losing quarter is 4.2% in the negative, and the winnings on average are above 11%. As you can see, we have two losing quarters in a row back in 10, then that is gained back. We have a single losing one here, 1.1%, and that is gained back quickly and so on. Then we have several years here all in green. In the end of 18, we had a couple of losing months, but the year was in green all over, overall. And then 19, very nice green, and 20 also very nice. So far, 2021, where we are trading with real money, is aligning nicely with our stats. We started with real money here in the summer last year. So everything is doing just as we expected it to. All right, let's have a look at some of this, or actually not some of them, but all of the stocks. So this is the stocks we're looking at right now, the ones that we have been trading for the last couple of months here. I should say that here in the beginning of the week, I'll make another video just about the ETF strategy. This is a website. Many of you have signed up for a free newsletter here. We won't spam you with all sorts of stuff, but we'll just send you some videos, some emails, and we'll send you the once per month trades that you need to take if you want to follow this strategy. So this is a very good, very solid strategy, as you can see, and it has actually performed quite well in the second quarter as well this year. So let's have a quick look at the stocks that are in here. And we're starting with Walgreen Boots Alliance. And as you can see, we started this here around the 1st of April. We bought in And the good thing with this automated strategy is that you don't let your emotions control if you should go in or out of a trade. You buy the stocks here, you keep them for a quarter, unless that our models are saying we should go risk off, then we go risk off into some ETFs. But as you can see here, Walgreens still on an uptrend, but just going sideways. Let's go through we have 22 stocks. I'll just go through them quickly. Now, Intel here is one of our larger losers, and it was in a good trend when we bought it, and I would actually have considered buying it just from my normal strategy. However, it just turned down, and we are at a loss right now. It doesn't concern me too much. There are 22 stocks here, and we have yet a month to go. And it could easily be that Intel ends up at a good break even here. No one knows, and we're not trying to predict the market in any way. Goldman Sachs Group, well, I haven't drawn a regression channel on that one, but as you can see, it is just in a fantastic uptrend. And sometimes I do that. I take the measuring tool out here. I take the regression line in the middle and I find the beginning of a month, and then I draw this to the next month. And as you can see, as long as Goldman Sachs is staying within this channel, it is making 7.5% each and every month. So let's just hope it stays there in a very nice uptrend. Caterpillar, also one that is in a good uptrend. Again, we can draw all sorts of formations in here. This is a triangle pattern. It breaks up, it falls back and bounces up here. But again, our model doesn't really care. We bought it here, and I would probably have waited with my normal model to buy it somewhere here. But then again, this is just an automated algorithm. And to be honest, in the first quarter this year, I think I made, was it 3 or 5% or something like that on my normal active trading of stocks, and this model made 14%, so it beat me in the factor of 3 or something like that. So you should take that into consideration as well. JP Morgan, another one of the banks here in a fantastic uptrend. It is just chugging along, making us a lot of money. You can see we bought it down here, and there is a lot of room upwards for the last month of the quarter so far. Applied Materials, again, one of the stocks that we bought pretty much at the top here. Then it went down, and if I had used my normal strategy, I probably would have sold it somewhere down here. It's hard to say exactly, but I think I would have sold it down here. And then it bounces back, and as you can see, we're pretty much at a break even here. And I have a feeling that Applied Material has a lot of room to the upside from here. So we could easily end up making 5 or 8 or 10% on Applied Material for the entire quarter, even though that we were actually down at some point of something like 18%. So that is a good thing about having these long-term quarterly momentum strategies. All right, semiconductors. Now, just after we bought here, and of course this is also to some of the other stocks, but as you can see, we bought here on the 1st of April, and then it took a huge nosedive, and right now we're actually in the positive on the NXP semiconductors. We bought it somewhere around here. We were down at around 12%, and now we are up with a couple of percent. So again, a good example of the strength in an algorithm like this. Fortinet, nothing really to say about that one. It is one of the stocks that have been making us the most money in percentage here. We bought it down here, and right now it is up 16-17% here, so nothing to complain about there. CDW, again, very nice uptrend, but has been a bit tough on us the last weeks here. We bought it at the 1st of April as all the others. It was very nicely up, then it got into the negative, and right now we are close to a break even. No one knows where that will go. Mohawk Industries, also very nice uptrend. We bought it here, still in a good positive result, even though we have had a lot more at some point. Skyworks, yeah, again, one of these that have been losing us a lot of money. It is coming back, maybe, nobody knows. So a lot of you have asked, do we have stop losses on this strategy? And we don't. We are buying quite a lot of stocks, so we are diversifying a lot. Of course, in a quarter like this, where we are moving into some sort of sector rotation and maybe a movement from tech to or growth stocks to more value oriented stocks, then of course a strategy like ours will suffer a bit. But then again, we are up almost 2% for the first 2 months in a tough environment where a lot of people have experienced a lot of losing in their portfolio. So I'm actually very satisfied with the performance of this strategy. Limited brand, very nice uptrend. I don't even know where to begin the regression channel here, but somewhere here, going from around 10 and then to 70 would have been a nice trend to be on for the entire movement here. So limited brand, okay, it's going a bit sideways, but doesn't really care. There's a lot of upwards potential here. KLA Corporation, one of our losers here, bought at the 1st of April, pretty much at the worst possible time. But again, it was down, now it's up, and I wouldn't be surprised if we end in a positive or at least close to break-even territory here. Then we have the Deere. They came out with their earnings here. They actually dropped before that. And again, normally in my normal strategy, I might have considered taking some profit off the table here, at least if I have been on this travel here. You can see it's just breaking to the downside of the regression channel. Now there is still some possibility that it will go back into the regression channel here. Not the best technical setup, but then again, let's just let it run in a month, and if it underperforms here, well, then it won't get into the portfolio for the next quarter, that's for sure. Baidu, one of our really painful stocks to be in. As you can see here, I bought it around here, and right now, let's just have a measuring tool here. Right now, it is down around 12%. It has been down 20%. So actually, there's not that much movement to the upside before we are at a break even here. So Baidu showing some nice bouncing off the bottom, double bottom here. Then we have Generac. I think that is about a break even right now. It has been deep in the red. Now it is a break even, so let's hope it just continues upwards. Alexion Pharmaceuticals is pretty much, I think, our best stock so far. Let's see here. We bought it down at 1st of April, and right now, yeah, so at least it's close to being the winner. 15%, and let's just let it keep that running trend here. That would be nice. ASML, also a lot of choppy movement here, but in the positive. Diamondback Energy, one of the stocks, the FANG stock here, one of the stocks that went up a lot when people talked about FANG, the FAANG, these big S&P 500 stocks, and people misinterpreted and thought this was some sort of ETF that covered the FANG stocks. It was quite hilarious actually, but we bought it here. A lot of choppiness here and about a break even. Then we have Discovery, also one of the really painful stocks to be sitting with right now. It took a huge nosedive, but our algorithm sent us into it, and it is down right now by around 25%. But again, in this, we see a very good example of why diversification and why risk management is good, because Discovery, we only own about, I think it is 3% of the portfolio we're in here. So even though it drops 25%, it is actually only 0.75% of the overall portfolio that we are losing. So it doesn't matter if we run into a loser like this once or twice in a quarter. It doesn't really matter, as long as the majority of our stocks are winners and that we have several winners in the 15-20% range. Marathon Oil, one of the stocks that also have, of course, it's very it is very much moved around by the oil prices. So right now it is going up, and it was actually one of the stocks that we were a lot in red, and 17% here, and now we are at a positive of 3 to 4%. So as you can see, just jumping out of stocks because we get afraid here, it's not really gaining anything to the strategy here. Mosaic going up nicely. Invesco also one of the huge gainers here, and this one is, again, we are up here around 12%, and it looks nice, and 12% in 2 months is great. But again, we are only in with 3 to 5% in each stock, so this is nice, but it is just gaining back some of the losses we have on the Discovery, for instance. Then we are back at Walgreens, and we have been through all the 22 stocks. So what I know that when we're talking about algorithms and so on, what I think is pretty much irrelevant. But when we're looking at the stocks having a transitory month like we have now, where we are moving from sectors to sectors, maybe moving out of energy, maybe more into some defensive cyclical stocks and so on, nobody knows. But if that is the case, and we are about to do that movement, I think we will have a good upside of many of our stocks here. I think we could easily do somewhere between 2 and 5% for June. But then again, we have losing months once in a while, and this could be one of them. When we get to the new quarter, I expect our algorithm to choose some stocks that are better stocks when it comes to the movements we see in the interest rates right now, maybe some inflation coming and so on. But the good thing with an algorithm is I don't have to think about it. If you want to follow this strategy, you can find me here, Market Timer DK, and we are also setting up an account for this Invest Like a Guru. But if you want to get the email, it'll be sent out, I think, today or tomorrow. Remember, United States is closed tomorrow, so you can just sign up here for the free email. It'll never cost you anything, and yeah, you can just follow it and trade it on your own account if you want to. Or if you don't just want to copy us, we will get an account up soon where you can copy this strategy as well. That's all for now. I hope you found some sort of golden nuggets in here, a bit of inspiration, and I'll talk to you again soon. Take care of yourself and your money out there. Bye.